Bonsoir, good evening, and welcome everyone. Thank you for joining us. I'd like to start by recognizing that Manitoba Music is a settler organization based on Treaty 1 territory, the original lands of the Anishinaabe, Cree, Oji-Cree, Dakota, and Dene people, and on the homeland of the Métis Nation. I'd also like to recognize the strong Inuit community we have here in Manitoba. My name is Ashley Bienage, and I am the Indigenous Music Development Coordinator here at Manitoba Music. Today, I'm joined by Tim MacMillar of II Music. This is the third session of the On Track Indigenous Music Business Basics series happening this month and streamed to Facebook and YouTube. These sessions are talking about foundational business skills to help artists like you get organized and develop the tools needed to establish your music as a business. Today, we're talking about bookkeeping techniques. If you want more information on the On Track series, you can go to indigenousmusic.ca/ontrack. If you have any questions during the presentation, please write them in the comment section and I'll be sure to ask Tim during the presentation. And with that, welcome, Tim. How are you?
I'm doing pretty good. How about you, Ashley?
I'm great. Thank you so much for joining me tonight or this evening. I'm very excited to hear your presentation on taxes and bookkeeping, and not taxes specifically, sorry, bookkeeping. With that, I'd love for you to introduce yourself and start your presentation.
Yeah. Well, I got an intro in the presentation, so I'm going to dive right into it here.
Perfect.
So let me get it fired up. And I guess I have to share it.
Perfect.
Right.
There we
How's
go.
that? All right.
All right.
So I'm talking about bookkeeping techniques today. Something that I'm passionate about and something that musicians, artists, bands all have to deal with, whether they like it or not. So hopefully this will help you kind of think of some of the things you need to consider in this area to keep it all organized and together. But first, I wanted to do a land acknowledgement. I'm in Toronto. The land I'm standing on today is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, and the Haudenosaunee and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. I also acknowledge that Toronto is covered by Treaty 13, signed with the Mississaugas of the Credit, and Williams Treaties, signed with multiple Mississauga and Chippewa bands. All right. So just a little bit about me. I came to bookkeeping later in life, and I started out as a musician. I got into music at a pretty young age. I started playing piano when I was about 5 and was doing the Royal Conservatory. After a while, I kind of thought piano wasn't cool and guitar was, and my dad had a guitar, so he started teaching me a few chords, and from there I kind of started learning some simple rock and punk songs. And then from there, a lot of my friends were getting into guitar and music as well, so we just started jamming together, and we formed a band then, which became my band that's still going now, called Protest the Hero. And I realized that's probably a pretty unlikely story for a lot of musicians who are forming their first band, and that ends up kind of being the band that they, build a music career with. And with Protest the Hero, we've toured internationally, every continent except Antarctica. Still waiting for that one. And we've released 5 full-length records, 2 EPs, had 4 Juno nominations and 1 win, and our album Fortress was awarded a gold record. I can see it in September 2015. So it took 7 years, but we got it. So why am I here to talk to you about bookkeeping? Go back to there. So basically, when the band started playing shows and touring a little bit, we didn't have a crew member. Sometimes we would bring a merch person. But I was always the one with the most responsibility. And that doesn't mean I had a lot, but I just had a little bit more than everyone else. And I would collect the money at the end of the shows. I would collect the merch money, and I would make sure it got into the bank. I did a bunch of other stuff and was called the band dad. There's usually a band mom or band dad, someone in the band who kind of takes on that role, which I later found out was a tour manager. So, once we got to hire that job out, I was the person that was usually a liaison with the tour manager and, would just kind of explain some of our bookkeeping systems on the road. Um, you know, After we got a little bit more established, we found a firm that would do business management and bookkeeping for the band. And that just meant that we had someone that was kind of sending invoices on our behalf, paying bills for the band, and then just keeping all the books organized. Um, and I was usually the person that was the liaison from the band to the manager or bookkeeper. So yeah, as you can see, I was always involved with the financial side of the band and the business. Outside of that, eventually we tried a few different firms, um, and it got to a point where we found someone who was willing to kind of train me to do the bookkeeping, and he would do the business or the accounting side of it. So if I messed anything up, he would catch it, and he's kind of mentored me, and still does to this day. Um, Actually, a Winnipeg person. So shout out to Shane at MKM Management. But I started to do PTH's bookkeeping, and then I was hired at Six Shooter Records to do bookkeeping and business management for some of their artists, Whitehorse and Tanya Tagak. Um, and I just started kind of learning how to do this job with some help along the way. And I just wanted to kind of branch out on my own and offer these services to bands and artists and other music industry businesses as someone who's kind of on the inside of the music industry. So that's kind of my spiel on why I'm here. So to get right into it, before we talk about bookkeeping, and Ashley mentioned this out of the gate, you always have to think of your music as a business. So whether that means you're an artist or a band, you have to think of the business implications. And if you can get in that mindset, it will really help you when you're making decisions, and hopefully it will help you create habits that will keep everything on the rails. And you have to be organized. So that's the same thing. I kind of just covered that. And that doesn't necessarily mean you have to make decisions on what's going to make you the most money. That's kind of besides the fact, but you just have to say, okay, my business is doing this. You can even, I guess, like technically a corporation is thought of as like its own entity. But if you think of your business as like a person or a thing that you have to, nurture and all that stuff, I don't know if that's too far out. But if you have that, wearing that like business person hat when you're making decisions and thinking about strategy and stuff like that and how you're going to approach certain subjects, I think it's important to do that and kind of divide it from your personal life. So what is bookkeeping? So I wanted to show kind of a behind the scenes, like what happens if you're using bookkeeping software. You won't see a journal entry now and again. But without going into too much detail of like accounting, all of like accounting and like software these days is based on the double entry system. So that means there's always going to be a debit and a credit, and they need to match. So here is like a simple journal entry that I made up. So if you were playing a show at the Forks and you got paid $1 million, must be nice. And I see I didn't fix the checking account. I spelled it the American way. But the credit is for the performance income, and the debit is going into the bank account. And we can talk about this later, but I just wanted to show, and if it's something you keep in mind, that there's always, for every debit, there's a credit. And sometimes it's hard to keep straight what's what. If you credit an income account, it's going to increase it. If you debit a asset account, it's going to increase it. Like all the debits and credits, sometimes it gets complicated, and that's why we have the software to do it for us. But it's good to know. And then here is just like a little bit more of a detailed, example, if you had a Winnipeg show and you had $200, you pulled $200 out of the bank account, and then you bought guitar supplies and drum supplies and pizza for the band and crew and $30 for your taxi to the music store. You can see that it's all adding up on both sides. And accounting software won't let you put a journal entry through if it's not matching. So just, I wanted to kind of show a visual around that. But you may not have to worry about that. So I think the main job of a bookkeeper, or if you're doing bookkeeping for your band or solo career, is identifying all the business transactions that have happened in any given time period. So usually that would be monthly, quarterly, annually. I would say monthly, it's good to look at all the transactions. So that would be anything going in and out of your bank account, in and out of your credit card account. If you have like a cash account, all reconciling all of that and just seeing what each thing is. And then annually, that's more for looking at like, how did your business perform over the year? Like, also, a lot of annual reports are used for taxes. Kind of covered business transactions going in and out. So yeah, you need to categorize every transaction. So if you spent $30, what was that $30? Oh, that was for the taxi. The $70, okay, that was for pizza. There was the $1 million coming into the bank. What was that? Oh, that was for that show at the Forks. So it's good to look at your bank account, and you can actually physically do this, like print it off, or if they mail it to you, and write beside it what everything is. And if you get in the habit of doing it, it's not going to come to the end of the year and you're like, oh, what was I doing on January 12th? When I spent $112. So, that would be a good habit that you could implement to try to stay organized. Most people would have like a business bank account and maybe a business credit card, maybe multiple business accounts for different currencies. Sometimes it's nice to have a savings account to squirrel away tax money or anything you might owe, or GST or something like that, if you have that. And then when you've categorized everything, that's when you can have reports. So if you've entered all the information for the month, you could run a report and see what your profit was for the month, or see what your cash flow is, stuff like that. And yeah, I just kind of explained that. And then I just want to point out that one of the biggest issues that I try to fix when I'm starting to work with new clients is to see, okay, like, what accounts are you using? And do you have a business account for your business? And do you have a business credit card? And when you don't have that, it's not that you can't use those expenses and those transactions, but it gets really hard to keep track of, okay, this is my personal bank account, but I got my SoCan money here. And this is my dad's credit card, and I reimburse him every month or whatever. But it's so much easier to have all of that in the same place as much as possible. Sometimes you forget your credit card or can't use it or don't have your debit card. Stuff happens. But the more that you can just start with, like, these are my business accounts and I only use these accounts for business transactions, you're going to be on your way to success, definitely. Or your bookkeeper, whether it's you or someone else, is going to have way less of a headache kind of making heads and tails of it all. Okay, so just to touch on the different account types, I'm going to show you an example after this. But these are like the main, I guess, like categories that you can have accounts in, and then you can kind of break them down further. But you could have an income account, so that's incoming cash, money being paid to you. Income is also often called revenue. They can be used interchangeably. Expenses is money going out. something, paying for something for your business. So you'll see in more detail when I show you the accounts. But yeah, anything you're paying for that's for your business can be an expense, unless it's an asset. That's the other thing. And this can get kind of confusing, but I would say most things are expensible, but assets are items that hold their value. So, cash is an asset. So if you have a bank account with $1,000 in it, that asset is valued at $1,000. Investments, whatever the value is for the investment, same thing. Then there's like property and equipment. So that's musical instruments. Buy a guitar for $1,000. You can't expense the $1,000 because it still holds some sort of value. A house, a vehicle is an asset, computer equipment, recording equipment, furniture for your home office, all of that stuff. So it's easy to think, oh, I'm going to pay, $10,000 for this Gibson 1960 Gibson SG or something like that, and I can write it all off. That's not the case. But there's something called depreciation, where you take a portion of the asset and write it off each year over a period of time. And there's different rules around that for taxes. But that I just kind of wanted to put that concept out there because it's an important one. Liabilities are debts you owe. So an example would be like a line of credit, even a credit card. Let's say you charge $2,000 in a month to your credit card. That's going to be a liability on your books until you pay it off. There was the SEBA loan for small businesses. So that was a loan that is being paid or needs to be paid back in a couple of years. They keep changing it. But that's a long-term liability because it's not a loan that you're expected to pay off within a year. And finally, equity, that's just how much of the company is owned. So like the best way to think of equity, I think of like a house. So let's say you have a $500,000 house and your mortgage is $250,000. So the equity in the house is $250,000. So technically you own the $250,000 of the house, and whoever owns the mortgage, I guess that's the other half. So it's the same thing in a company. If you have liabilities, then you're not going to own the entire amount of the company. So there's this other accounting equation: assets equals liabilities plus owner's equity. So basically, whatever the value is of all your assets, so all your cash and equipment and property, and then liabilities and equity will equal this amount. So I'm sure that wasn't completely clear, but owner's equity is just how much of the company you or the shareholders own, if that makes sense. Okay, so I'm going to show you a chart of accounts. I feel like that's probably really small. Let me know if that's good. So there's a fictional band called Insert Name Here. It was actually from one of Protest the Heroes music videos. We did like a puppet band, and that was the name of the band. So I've been using that one. But basically, here are the accounts. You don't need to use numbers. I personally like it because it helps me remember where stuff is, and there's kind of a system to it, but I wouldn't really worry about that right now. These are asset accounts, bank accounts. So like a Tour Cash and Tour Cash USD. I like to make those cash accounts for if you have money while you're on the road. That's how it gets tracked. And when at the end of the tour, hopefully you take all the money that is left over and you deposit it in the bank, and then that would kind of clear out that account. Checking account USD. I use some services for different currencies. There's a company called Wise. But just know that there could be, multiple currencies as far as bank accounts if you're receiving payments in different territories. And that's dependent on, where you are performing and, releasing music and the relationships you have. A lot of people like having a PayPal account and a Stripe account. So Stripe's a credit card service, but I treat it like a bank account because it's not you using a credit card, it's people using credit cards to pay you. So basically, Stripe can receive the money and then it gets deposited into your bank. So I like to show the path of money coming in and then going into the bank account. Accounts receivable. So when you invoice someone, it goes into accounts receivable until the money's received, and then it will pull out of there. But it's good to know, like, this isn't money that's in your pocket right now, but it's money that will be when it gets paid, given that it gets paid. So it's good to have a value of like, okay, I have 10,000 in the bank, but I have 10,000 in my accounts receivable. So hopefully over the next month, I'll be getting that $10,000. So that's there. It's an asset. Merchandise. So yeah, merchandise is technically an asset until you sell it. So if you buy 100 t-shirts, you can't expense it. You're supposed to expense it as you pay it down. But I've found for bands, it's better to kind of deal with inventory outside of the books and just kind of do a count at the beginning of the year and at the end of the year and figure it all out in one shot. Yeah, I've never found like an easy way to do it in the books. So as I was talking about, yeah, officer furniture and equipment, music gear, computer gear, that's all assets. Okay, and then here are some of the liabilities in the 2000s. Accounts payable. So opposite to accounts receivable, that's money that you owe. So if you're getting a bill for something and it's money that you owe that you haven't paid yet. Visa payable, that's your credit card balance. GST, HST payable. If you're registered for GST, HST, you're either going to owe money or get a refund. In most cases, if you're like charging HST on your invoices or GST, you'll probably owe, but it could go either way. But anyways, this lets you know what you might owe, at the current time of the books. Bank loans. Okay. Equity. There's just really the main equity account in like a partnership or sole proprietorship is just an owner's contribution and withdrawal. And that it keeps track of how much money the owners are taking in and out of the company. And retained earnings, that's what's left over. It can, move to the next year or I guess the previous year. Income accounts, I'm going to cover this in more detail, but there's a look at some of those. And then all the expenses, the 5,000s. So, you can really track in as much or as little detail as you want. Some accounts it's good to track like for tax purposes, but I like in this case, I made a commission for management, commission for booking agent, just to be able to split out the two. You can see down here the tour expenses. You could just make a catch-all travel category. But I think it's important to know how much should we pay crew, how much do we pay musicians, stage supplies, flights, gas, all those stuff. It just gives you information that you can drill down into. So I think most of those are pretty straightforward. Oh, and then you might see this. We create like a suspense account. So anything that we don't know what it is, we put it in suspense. And then we have a list of stuff we need to chase down to get, the information about So that's just kind of a figure it out later
So
category.
this is a lot of accounts, and it can be kind of overwhelming to see all these numbers, especially if
Yeah.
someone is just getting started into bookkeeping and trying to keep track of all of their records. So, what is like a good like a rule of thumb of? And I know over the years you can start complicating it with all these codes, but what are some simple like what's a
Yeah,
simple way to go about it?
that's a great question. Like the thing is, what if you're starting an account, like if you're using like a software like QuickBooks or Waves or any of those, um, when you start your file, you they might give you some stock options, like some stock accounts. Uh, but what I found is as different scenarios come up, then you just add that account. So let's say, like in the income accounts, let's say you have a live income account because you're a performer. You have that one, but you don't have any merchandise or whatever. Or you don't have a publishing income or anything like that. So as that comes up, then you can add in the new account.
So
Um,
it's better to have a different account for each type of income you get as an artist. It wouldn't be don't just want to have one income.
yeah, like you could do like a catch-all sales, but just in my opinion, it doesn't tell you where you earned your money from.
Mm,
Like for tax purposes, I don't think you have to show where, like, what categories you earned your money from, and expenses are a little bit different. But yeah, you could put it all to a general income account. It's just if you want information from it, and I've found that at least the live album merch and publishing, as far as earnings, those are kind of like pretty direct or separate streams
right.
that but yeah, you could put it all into one if it was pretty low activity or you didn't want that information. And yeah, same thing with the expenses. Like if you're using your bookkeeping to help keep records for tax time, there are certain categories that need to be broken out. But it doesn't have to be as, like, like I said, there could be a travel category that's just a general travel, and yeah, like maybe merchandise cost, and well, that's but like venue fees and merchant fees and merch seller, that could all just be like a merch expenses. And
Hmm.
you could have guitar and drums and supplies accounts, or you could just have like office expenses.
Right.
So yeah, if you can generalize stuff, by all means. And just, yeah, sorry, yeah, if this is a lot going on, because this is like an older uh account with a lot in it, but it's like you can always add to your accounts as things become relevant.
Okay, phew.
No, you need all of
Yeah, I
this.
was like, I thought I was pretty good at organizing my taxes, but this is pretty intense. But you don't have to um, write down all these accounts. It's just organizing it as you go and making sure that you're being clear with where the money is coming from and going. And I think that's kind of the lesson from this document.
Yeah, and like there's the two purposes of bookkeeping that I always kind of come back to. Is one is bookkeeping for taxes and what the CRA needs to see. Um, and that's not necessarily going to give you the information that you
Hmm.
want. So, like for one example, um, with assets like office furniture and musical gear and computer equipment, um, I believe they have three different depreciation values that you can claim for your taxes. So it's like, in that case, that's why I break it out that way.
Hmm.
But that being said, if you just had all of your assets in one file, come tax time, you could just look at the what you have and then class it then too, right?
Right.
Um, so
Okay.
does that make sense?
Yeah, I think so.
Okay. I'm going to go back to the presentation. Oh, there's that. The assets equal the liability. Okay, so yeah, this is kind of what we were looking at, the income. But yeah, these are just some of the income, or these are, I would say, most of the income categories that I've come across when doing books for different clients. But by no means would everyone have every one of these. It's just different people are kind of earning money in different areas. So show income, I feel like, is pretty straightforward. Live performance or now virtual streaming or any of that stuff, I think is kind of all could be caught in there. Merch income, merch from live performances, or if you have a merch store or like an online store, you could kind of all bundle that in there. Album income and royalties. So this would just be anything kind of earn from sales or streams. So if you're getting money from like a TuneCore, DistroKid, or one of those services that services your music to all the streaming platforms, it could be in there. Or if there is like physical sales of records or vinyl or CDs or anything, can kind of all go in there. And I like to break that out from publishing, because publishing is usually coming from like the songwriting side of the earnings. So whether you have a publishing deal or self-publish, or get a sync or a placement in a commercial or TV or video game or anything like that, it's just like a different sale of the music. Grant income. So yeah, there's a lot of grants like provincially and federally that are available, and it's nice to see where that's breaking that out to see if you are earning grant income and how much in a given year. Yeah, you can always make a miscellaneous to just put kind of like the income that isn't often earned. So like some of the ones that I've come across and would be like a client that has released a book, so they get book royalties, or they sell their art, or they do session work, or even like they're in someone else's band, so they're like get musician invoice as a musician for that kind of work. So anything like that, you can kind of put in a miscellaneous if it isn't something that happens often. And then reimbursements, it's good to track reimbursements as like an income. So let's say you paid for someone's flight and they're paying you back. You would expense all of the flight, and then the reimbursement would be sent back, and it would just go into this account. So it's just kind of a cleaner way of tracking that stuff. So yeah, that would be the income categories that I think are, on, I would say these 5 are on most of my clients, if not all of them. But again, like Ashley was asking, like you can keep it general if you'd like, or if you want to break it out in detail, you can do it like that. Okay, so the other side, the less fun part, is money that's going out. So a lot of this would probably be for expenses. You saw the big list of accounts that I had for expenses, but yeah, cell phone, travel, rent, music supplies, office supplies, any of those things that are expenses for you to operate your business. Assets we talked about earlier, but if you're buying a piano or a keyboard, money's going to be leaving the account for that. Owner's draw. So anytime the owners are taking money out of the business, that could be another thing that would be like a money going out. and liabilities, just paying off any of your loans or debts that need to be repaid. And I think the reason I made this slide is that like this is the checklist that goes through my head if I'm looking at someone's bank activity. I'm like, okay, what was that? And I found this is the 4 things it could be. So if you can figure out what it might be, then at least you have a lead on, okay, let's get some more detail about, why that's that amount or whatever. And that leads to this slide, which is keep your receipts. So yeah, it's just so important, mainly for tax purposes. If they ever want to look at anything that you've claimed, you're going to need to back it up, and you need to keep it for 7 years. But if you've claimed things, especially expenses, and then they say, oh, let me have a look at all your travel expenses for 2017, and you don't have receipts, they're not going to count it, and then they'll reassess your taxes and take those expenses out. So yeah, that's kind of the warning at II Music. If clients aren't giving us receipts, we're not going to claim it. If you want to take a risk, you can, but you have to know if the CRA looks at it, that you might be paying more tax. So that's the warning. But yeah, every time you pay someone, get a receipt or an invoice. So if you're going on tour and people are working for the band, or get them to send you an invoice before you pay them. It goes without saying, if you're shopping and buying supplies and stuff that you need for the business, just keep the receipts. I just take a photo of them. There is software that you can use and apps and stuff that do some of that stuff too. I think Receipt Bank is a popular one, Scannable. But any way that you can find a way to file and organize and keep all that stuff, it's important. Alternatively, on the other side, if you're getting paid for something, it's also good to have documentation. So if you play a show and someone gives you a check and you go to deposit it, take a picture of the check before you deposit it. Now, a lot of the times, if we're doing Canadian currency deposits, you have to take a picture of the check to do the mobile deposit, and then you actually have the physical check, and I just file that away. E-transfer. Yeah, if someone sends you an e-transfer, it's good to kind of save it, like save the email you get or whatever. But yeah, and I think it's important. Like, a lot of the time, people will make deposits into their bank account and then they won't remember what it's for, and it's really difficult to do it if you've deposited more than one thing at the same time, because you're like, okay, what is this number comprised of? And there's been times where I've had to work backwards, and I have seen like, okay, there was like $1,000 in cash deposits and 1,500 in check, and I can kind of piece it all together. But if you're making deposits like that, again, it's good to write down what you're depositing. Sometimes they print off the deposit slip. You can just write on it. I know a lot of banks are phasing out like the bank book, but just finding a way to, again, keep records is crucial. And then I just wanted to point out, like, showing this statement, so showing your bank statement or credit card as the receipt isn't enough. So yeah, a lot of the times, let's say one of my clients, they hired a musician to go on tour, and the musician paid for a cab. Then they'll just send a proof of the payment that they made for the cab from their credit card. And yeah, that's not enough detail. If the CRA wants to look at it. So I hope I didn't beat that in too hard, but it is important to have all that because you're kind of lost without it. So whether it looks like this, and that's Johan organizing receipts, but I don't love when clients send a Ziploc bag full of receipts, but that's better than not having anything. I can just quickly go over this. I've kind of covered what bookkeeping is, but what a bookkeeper will do on like a daily or monthly basis is, categorizing all your transactions, looking at the bank and credit card statements, and, going through the ones, going through them all. And if there's like anything that they don't know, then kind of following up with the client about, what was this, and getting the documentation. Filing the documentation that supports the transaction. Yeah, so every transaction that's happening, we are trying to get something to back up what it's for, and we link that into the accounting software. So it's right there, and then also file it digitally. Hunt down what's missing. So, every so often when receipts are missing, kind of just reaching out to the people who made the purchases or have the details and getting it. Reconciling the bank and credit card. This job is just basically you take the bank statement or credit card statement, you look at the starting and ending balance, and you make sure what it says on the bank statement is matching what it says in the books. So it's like if it does match, then that means you've got everything, and everything's kind of like matching up. Because if the bank and the books are out, then you got to figure out where is the discrepancy. Collecting all documents for tax filing. So yeah, come tax time, you get your tax slips. So anything that the accountant will need to file taxes, just kind of pulling that stuff down. If the business owners want to see reports about how they're performing or how things have been, you can send it to them. Sometimes management sees these reports too, just to kind of see how things have been going. And then, year end reports to accountant for tax filing and sales tax tracking and filing. So yeah, like I don't file taxes. So I'll run reports and send it to the accountants for whichever client. And, it's kind of a good back and forth where they look at the books, and if they have any question, I can clear it up. But it is kind of like a check and a balance for everything that's been done for the year. Okay. Okay. So I just had a little example about tour accounting. So sometimes it's a little bit tricky on tour to keep track of everything, just because there's multiple forms of payments, stuff's coming in from different places. So it's good to have a record of it all. Expenses can be paid in several different ways. The goal is to record every inflow and outflow of cash and have a record of each transaction. So I think the big thing is if you're receiving cash, you want to have a record of what's coming in and what's going out. And you got to make sure that with your accounting sheet, you can check your actual cash on hand. So if you have the sheet that'll show you, you can say, okay, I actually do have what the sheet says. But especially when you're dealing with cash, you want to make sure your receipts are collected. And, you just have all that organized.
If you got a cash payment from like
Mhm.
a tour and you're on tour, could an email with like the confirmed amount from that person be enough, or would you writing up an invoice that you sent to the person be good enough?
In that case, usually like a show would have a contract, right? So it's like if there's a contract that's saying like, hey, the promoter's saying they would pay, this amount of money. So I use like show contracts for shows. If there wasn't that, I would say you could just, have a receipt book and just get someone to sign for it. Just as like you write their name and you paid me this, kind of like make up an invoice or like a receipt on the spot.
Mm-hmm.
Because yeah, I guess like essentially you're charging someone, right, for your service as a live performer or whatever the job was for that. So it's like you're giving them a receipt and then you can have your copy of it.
Okay.
But yeah, like, that would be in the case of if there wasn't a contract. And usually a lot of promoters will give you like a show report too. So that helps also to like, again, say on this date, this is the show and this is where it was and how many people came and all that stuff.
What's a show report?
Like a settlement sheet.
Mm.
I can see if I can see if I have one that I can share. But yeah, basically it's, a breakdown of all the expenses that have happened in the show. So it will say like, okay, if the band's getting a guarantee, okay, the headlining band's getting $500 and two of the opening bands are getting $100, and the promoter paid $300 for food and drinks for all the bands and any of those expenses. And then it will say, okay, we sold 250 tickets at $20 and that comes to this. And then it just kind of puts it against itself to show if the show was like a profit or a loss. And you have to worry about that a little bit more if you're getting a percentage of the profit. So sometimes a band will do a deal for X amount of dollars up front and then like 80% of the profit afterwards, right?
Right. Yeah. I think as a smaller artist, I don't think I've ever gotten something like that. But I guess a contract makes sense, or an invoice, or something that you some physical piece of paper or virtual piece of paper that you signed.
Yeah. And I think like, again, for tax purposes, like they're not going to say, oh, like you don't have documentation for this money that you want to pay tax on.
True.
But it's always good to have something. But yeah, no, a lot of the time people will be getting a flat fee. If you can ask for a percentage, sometimes a percentage can be a lot better than even if it's a high guarantee. And it's even better if you're getting a flat fee and then if it goes well, percentage of like the net box office receipts or whatever.
Mm-hmm.
Because I think that's it's representative of what the band or the package like brought out, right? So it's like if you sell at a show, it's like the promoter shouldn't necessarily make all the money from that. If the band brought all the people out, maybe the promoter brought all the people out. I don't know. but
Yeah, totally.
but yeah, it kind of gets both the band and the promoter kind of invested in on the show. So
Okay. Thank you.
but yeah, if I don't have something, I should just maybe I can send you something as kind of like an example if people wanted to look at that.
Cool.
Okay. And then yeah, the final thing of like the tour report is then you or the tour manager, whoever's doing the report, can send that to the bookkeeper, and then the bookkeeper can actually add it into the books. And like I remember in my case, usually when I was touring, like our tour manager would send it like once a week so the bookkeeper could add it and check it over. Just because you don't want to have like a 3-4 week tour and then get to the end of it and then have a bunch of questions. So it's if there's anything that's like seems off, it's good for someone else to have eyes on it. So let me pull up my sheet. So this is a pretty simple one, but it gets the job done for sure. It's more than enough. I can make it a little bit bigger. So I was just making like a pretend tour for this week. And so basically for incoming cash, there's merch cash, merch square. So that would be if you had a square reader at the merch table and we're taking credit card. Merch fees, which was usually an outgoing cash. And then this is just the guarantee. So the tour manager knows what the total guarantee is supposed to be. The deposit. So sometimes a booking agent will take a deposit from the promoter. I'd say like 10 to 50% is usually, but sometimes the booking agent takes all of it. It just depends on the situation. But what you're collecting at the end of the show is your guarantee with tax included, minus the deposit. And then I just have check received in cash received. And then if there's any specific notes you have to make, it's there. So let's say in Winnipeg, you sold $500 in merch in cash and $500 to the square reader. Merch fees. So some venues charge a fee for letting the band sell the merch, which I don't love, but sometimes it seems to be a thing. So let's say on $1,000, I charge 10%, so they take $100. Let's say the guarantee was $800 and it was $150, and then a check was received for. It's totaling here at the bottom. So that's kind of the idea. So I pre-filled what it would look like. So a week of a tour would kind of look like this. And what it's showing you is the total cash in, the total check in, the total square in. It's good to have a record of square. Just keep in mind that this is going to your Square account and then gets deposited to your bank. So for outgoing cash, again, you can just go and put the date and put what it's for. And this is for outgoing cash. So this is only for cash purchases. So something like per diems, and per diems are something that like if you're touring, you're allowed to have an allowance for food and stuff like that. So I think the max allowance is like over $50, but it doesn't always make sense to max that out. So whatever the band figures out is reasonable to have to get your meals covered for the day. So like, let's say in this case, it was a week for 3 people, so $100 each. So that would be a cash. I thought like parking can be cash, taxi, whatever it is. But yeah, only cash expenses in this part. And what it will do, it will take the total away from the cash on hand. And then the only other spot where your check or cash balance would change is if you go to the bank. So but let's say you made a deposit, then it takes, so for the cash balance, it takes away this from the total cash, incoming cash, and then it takes this amount away, and we're left with $710. And the check deposit just goes off the 2720. So you'd still have that. You probably wouldn't go to the bank and deposit some of your checks, but who knows? So this, the main thing here is to look at your ending cash balance. And you can do this daily or every time you update this sheet, but make sure whatever you have in your backpack or wherever you carry your cash, 710 matches what the sheet says. And if it's not, you just have to figure out, okay, what did I spend money on? Or, you could have miscounted something, or who knows. And if it's above, sometimes people think, well, cash balance on the sheet says 710 and I have 810. So it's like, that fine, we're up $100. And it doesn't really work that way. Like, there is something that's off, and it doesn't necessarily mean that uh that you have more money than you should, and you can just take it out or whatever. So I think, like, you can be reasonable that, like, maybe it will get out of balance a little bit. I'd say like $20 either way is reasonable for a week or a tour or whatever, but ideally you want it to match. It's like checking your cash register. If you ever worked sales, I think you have to, like, make it match with all the sales that went through there. And then this other area is just that's for credit card expenses. So that's not going to affect your cash at all because it's just going off the credit card. But it's good to have a record of what you spent, and then, like, you could just keep an eye on, okay, we made this much money and this is how much we're spending. It would be a good way to, like, keep track of, like, your budget a little bit and making sure you're not spending all the money that you're earning, unless that was the plan. So is that all good?
Yeah, I think so.
Okay.
And you sent me that document, so if anyone's interested, they can always reach out to me and have access to it, right?
Yeah. Okay, one other thing that, like, I think I wanted to speak about this earlier, was, so this is one of the main reports that you would run with accounting software, but it's called a profit and loss, and it just shows all of your income and all of your expenses, and it calculates whether you've made a profit or whether you're at a loss for whatever time period. So often I'd run a report like this and send it to the accountant for the previous year when tax season comes around. So for insert name here, you can see these are the accounts we were talking about, the income accounts. They say revenue here. And then cost of sales. This is a type of expense, but it's just for a t-shirt, you can factor in the cost. So, like, if you sold a t-shirt for $20 and the cost was 10, it gets factored in and it gets subtracted before the other expenses come in. So here, wages and salaries, that's another expense. So, like, you can either take money out of your company as a draw from your company, which is before tax, or you can, like, do it as a salary and pay prepay your taxes, and you need to set up payroll for all that stuff. But it's would be an expense if you did it that way. So that's why that's there. Yeah, these are most of the things that we talked about. But then at the end, it shows you, so there's the total expenses. I forget what the total. Okay, the gross profit was 102,000. This was 93. So in this instant, their profit for the year is 8,200 or 8,300, I guess. But yeah, that's kind of the thing. You can run reports like this per month, per quarter, but you can just see if you're being profitable or if there's a loss. And, if you do have a loss, it's not a problem. A lot of businesses have to, like, or a lot of business owners have to kind of, like, contribute to their business in order to get it profitable. And, it might mean that you get a refund in your taxes as well. So yeah, that's a profit and loss statement, also known as an income statement. So if those two are the same name for those two. Okay, this is the last thing, and we don't have to get in too much detail about it, but um, foreign exchange. Uh, so that's when you're dealing with more than one currency, um, and exchanging it, essentially buying one currency and selling another. Um, but kind of a rule of thumb, if you can receive income and pay expenses in the same currency, that's the best thing that you can do, in my opinion. Um, so, an example, you go on tour in like mainland Europe and you're getting paid in euros. Um, you could come home the last day and exchange all your money to Canadian dollars and then pay all your European crew members with like a bank wire or something like that uh, in euros and change it back. But every time you exchange that money, you're going to be uh, losing on the exchange rate. And oftentimes the exchange rate isn't the true rate. And like if, let's say, I took $100 in Canadian, changed it to US, and then took the US and changed it to Canadian, it's like I'd have significantly less than $100 Canadian after doing those two exchanges. But if and when you can pay expenses in the same currency that you're getting them. So if you did have European cash and you could pay your crew and your driver and your merch bill or any of those things before leaving the country, that's the best way to kind of pay the true cost of the expense without getting burned by the exchange rate. And the other thing, I was surprised when I learned that the exchanging at the bank, it's not a very good exchange rate. They just they mark it up in a way where it's like, let's say to buy a US dollar is 1.2 Canadian. Well, the bank would charge you like 1.23. So they add points to the exchange rate. And they must do enough business that like it's worth it, because I guess people don't go elsewhere to change their money. But there is a lot of foreign exchange places, sometimes at the airport. I don't know if they're probably better than the bank, but they might not be the best. But most major cities would have a foreign exchange, like a brick and mortar place where you can go to go and sell and buy a foreign currency. So yeah, in my experience, when I was working like at Six Shooter, there was sometimes I get foreign currency, and the bank I had to go to was right around the corner. But I would go to the exchange and then I'd go to the bank, and it might have saved like 30, $40. But to me, it was worth doing. There's also a lot of services that will help you exchange money, like from your bank, like online. So there's one that I use where, you know, I bank with RBC, and it's really easy to go, okay, I need 1,000 from my US account into my Canadian. Okay, I'm just going to swap it over. And they just do it right there. But with this service, they pull it out of the RBC US account and they deposit it into the RBC Canadian account. And it's me sending one email to do that. But it saves a significant amount of money. I think what was the example I was looking at? Sorry, I did an example. Okay, so yeah, yesterday I exchanged 1,000 US for a client with a foreign exchange service. They gave a rate of 1.26 Canadian for every $1 US. So when it was exchanged, it was 1,260 Canadian. RBC today is operating 1.2356. So the same exchange would end up with 1,235 and 60 cents. So the difference for on $1,000 US was $24. So it's like, that may not sound like a lot. Um, that's a dinner at least. But if you think of every time you exchange money, that's tens of thousands of dollars, or maybe 50,000 or whatever over the course of all of the exchanges you do. it does add up. So yeah, in that case, if that was $10,000, it'd be $244, and it's like if it was $100,000, it'd be $2,440. You get the point. But I would just try not to exchange money at the bank, and like I said, if you can keep it in the same currency for paying bills, that's the best to like receive and pay. That's the best way to do it. So yeah, that's pretty much it for my, oh, I got my last slide here. For my presentation, I know there was a bit of a focus on Indigenous artists. And the one thing I just wanted to say about bookkeeping is, the two purposes of bookkeeping for taxes and bookkeeping for having records and your personal information uh, and like data, essentially. But if there's a situation where certain people do have status and they don't have to pay tax on certain revenue, I would just say like it is important to keep track of it. There's ways that you could, keep track of your information for taxes, and then, have a separate sheet for your tax exempt revenue and expenses and stuff like that. And like I do think there's a lot of value in just keeping records of that.
Awesome. Well, thank you so much for that. I'm always there's so much to remember with that, with the whole world of bookkeeping and keeping track. And when you're sometimes a business of one, and you have to wear all of the many hats you have to do as a musician, it can be tricky. But I appreciate you taking the time to go through that and helping me create this resource for artists who can watch back and review closer to tax season. But I think it's never too late to get started on keeping track of all your business expenses and income as an artist. So I hope that this inspires somebody in the audience to start that shoebox of receipts, or making a folder and printing out all of their invoices, and just making it a habit and getting started, because it's always overwhelming when you put it off to the last minute, which it can happen sometimes. But as long as you're kind of on top of it, it can be a little bit more manageable. So again,
Yeah.
thank you so
And
much.
I do it too. Like I'm always coming in at the wire for my personal taxes. I'm like, it's like, this is my job. And then like when it comes to me,
Right.
um, but yeah, even if that means like looking at your receipts like once in June and once in December and doing half of it instead of like all of it,
Hmm.
anything, it's like baby steps, right? Just
Yeah. I always think I'm going to do it quarterly. I have like folders for like January to March, and then April to June. And I put all the receipts in each one. I never look at it until the end of the year. But at least everything's organized. So at least I have that going for me. One day I'll be on top of it. But it's a tough one. So again, thank you so much. It doesn't look like we have any questions in the chat. So um, that being said, if anyone who is watching afterwards, if you have any questions, please feel free to email myself, Ashley at manitobamusic.com, um, or just find him, and he can just do your taxes or your bookkeeping. Sorry, I keep saying taxes, but he's doing your bookkeeping for you.
yeah, feel free to reach out, Tim at iimusic.com. But I think the other thing that um, I'm really interested in, moving II in a direction where there is resources for people that aren't at the point where they can pay bookkeepers, but to kind of help them uh, start some of the II systems we use. So when it comes to that time, maybe you can turn it over, but
There's
I
no
really,
heartache.
yeah, but I just really want to. I know what it's like to be there and have to do everything yourself. And if there's, I remember being on tour and someone being like, "Here's a road report," and being like, "Oh my god, this is gonna make my life so much easier." So you know, I'm always willing to help in that regard, and hopefully, we can offer just like resources for musicians that want to have nice bookkeeping.
Awesome. So thank you. And thank you everyone for joining us for this evening. We're the third session of the On Track Indigenous Music Business Basics series. Tune in for our last session on music law and agreements. Go to indigenousmusic.ca/on track for more information about the series. And if you have any more questions, again, you can email me at ashley@manitobamusic.com. With that, I hope everyone has a wonderful evening, and I hope to see you next time. With that, merci, and goodbye.